Hello, welcome to Brainfood Bytes. This is Larry Pon, and today we're going to talk about Section 7508A and Kwong refund claims that are due by July 10th, 2026. The U.S. Court of Federal Claims ruled on November 25th, 2025 in Kwong versus U.S. that certain tax deadlines were automatically postponed for the entire COVID-19 disaster period, plus 60 days. The court found that under the prior version of Section 7508A, small little d, the suspension of underpayment interest and failure to file and failure to pay penalties was mandatory from January 20th, 2020 through July 10th of 2023. There was a similar tax court decision in 2024 in Abgo versus Commissioner. What Kwong did was it went further and invalidated a Treasury regulation that attempted to limit this mandatory postponement to 1 year. So this is going to provide taxpayers an opportunity to apply for refunds who paid for interest and penalties related to these tax deadlines during this period. So what your taxpayers are going to need to do is file a claim for refund and seek abatement for any unpaid penalties and interest. As expected, the IRS filed an appeal on May 15th, 2026. So what this means is this case will be going to the Ninth Circuit Court of Appeals, and we have no idea how long it's going to take for that case to settle. However, it's important that we meet this July 10th, 2026 deadline. So this applies to the 2019, 2020, 2021, and 2022 tax filings because it would have been postponed to July 10th, 2023. So with the 3-year statute of limitations, you need to file the claims before July 10th, 2026. And this is not a movable deadline. So this applies for any business, an individual who's charged penalties and interest between January 20th, 2020 and July 10th, 2023. Now you're going to need to review the IRS account transcripts for your clients to verify that they were assessed these penalties and interest and whether they paid the penalties and interest. So that's a very important step here. The second very important step is to file Form 843, claim for a refund and a request for abatement. On top of the form, you type in the words protective claim based on Kwong versus US regarding 7508A and COVID-19 disaster period, because this is a protective claim because the IRS is not going to be issuing the refunds because we have this uncertainty of what the Kwong case is going to be in the Court of Appeals. Now, who does this apply to? This applies to individuals, 1040s, corporations, 1120 and 1120S, partnerships, Form 1065, businesses, that includes payroll returns, the 940, 941s, information returns, W-2s, 1099s, and nonprofits are 990s. So this is applied to many, many taxpayers. Here's a picture of a sample transcript. And in this sample transcript, it shows the taxpayer filing their 2021 return late, and then they were assessed penalties and interest. So let's walk through this transcript here. So their account balance is zero because they paid out their outstanding balance. So this taxpayer filed their tax return on October 24th, 2022. Tax liability is $8,400. There was $4,700 withholding. Of course, there's still tax due. The taxpayer paid $700 with the return. And then the IRS assessed the penalty for late filing, failure to pay tax penalty, and interest up to October 24th of these amounts. And a notice was issued. And the taxpayer made a payment on November 21st of $1,200. And subsequent to that, the IRS added some more interest and penalty, sent another notice, and by December 19th, the taxpayer paid the outstanding balance. So although this return was filed late under the normal rules, but since it was submitted before July 11th of 2023, under the COVID-19 relief rules, it's treated as timely. So accordingly, the IRS should not have charged these interest and penalties because it was paid before July 11th of 2023. So this is a perfect transcript where this taxpayer is due a refund. So you'll need to download your client's transcripts. I know there's various software packages to do that. And you might know which clients have significant amounts that's worth claiming for. All right, here's a picture of Form 843. So on the top here, we write in the words protective claim based on Kwong versus US decision regarding 7508D and the COVID-19 disaster period. Now, since we are requesting abatement or refund, we check this box here for penalty. And for interest, abatement or refund of interest, we check this box here. So those are two boxes we're checking there. And then moving down the form here. So here's a caution of here of which penalties and interest and taxes would apply to Form 843. And then here's where you enter your client's information, their social security number, address, and all that information. And then line 1, enter the tax period or fee year. In our example here, it's 2021, so we enter that period there. Now, prepare a separate 843 for each tax period or fee year. So this is for 21. If there's 22, 20, or 19, do a separate Form 843. And do not mail them in the same envelope. Mail them in separate envelopes. Also, a best practice is what I do is make a copy of the first page of the 843, attach a self-addressed stamp envelope to you, have a post-it saying, please stamp and return to me. Thank you. And it actually works. That gives me actual proof that someone at the IRS actually got it. They put a stamp on it. I got it back, put it in my files to know that worked. Also, you're going to mail it certified with return receipt. So on the green postcard, you write in 2021 refund claim or whatever it was for. So at least you know when you get the postcard, you know which filing is for. And also put the name of your client too. So name of your client, the year, and what you're asking for there. So at least you know you got it back. So that green postcard. You go to the post office or someone for your office goes to the post office. I think we can't really rely on clients anymore to go to the post office since we kind of forgot about how to do that. Worst thing that happens, you do all this work and the client forgets to mail it. And that's a bad thing. So I highly recommend you build that into your fee to go to the post office. Don't go on July 10th. Go before July 10th. All right. Line 2, amount to be refunded or abated. So here's the amount there. Line 3, dates of payments. So I inputted the dates of the payments per the transcript. Box 4, check the box for a type of tax. So in our example here is income tax. Well, let's say you have a client who has a Schedule C. So they have income tax, but they might also have employment tax, interest and penalties. That's a separate 843. So don't have two of these boxes checked on one form. Don't confuse the IRS. Make that a separate 843 if it's employment taxes. Maybe there's a state tax. I highly doubt gift taxes, but So anyway, separate 843s. Do not put them in the same envelope and send them certified with return receipt. Don't drop it off in an IRS office. That's not proof of timely filing. Okay, line 5, indicate the type of fee to return. So in our case here, it's the 1040. But again, it could be other ones, right? It could be possibly 706, 940, 941, 943, 1120. So whatever that one is. Again, if it's more than one, do a separate 843. Line 6, if the claim or request involves a penalty, enter the Internal Revenue Code section. I put 708 here. You can also put a comma, and you can also include the other, the code sections for the actual penalty and the interest. If you wanted to do that, I would put it on box 8 here. All right, box 7 is check the box that indicates your reason for the request. I put down none of the above, but many of my colleagues say C is a good number 2. Reasonable cause or other reason allowed under the law can be shown, which is the Kwong case. Okay, number 8, They don't give us enough room here. It's probably easier for us to type up a statement. So I say, see attached statement. So here's my suggestion, text to paste in line 8. This is a protective claim for refund and request for abatement filed to preserve my right to recover penalties and interest assessed and or paid during the COVID-19 disaster period of January 20th, 2020 through July 10th, 2023 as a result of the Kwong versus U.S. ruling. Per Kwong, the IRS should not have assessed interest and penalties during this multi-year disaster window. This protective claim is being filed because the final legal determination is still pending in the Ninth Circuit Court of Appeals. This submission is intended to keep the statute of limitations open. This refund claim will be perfected upon the resolution of Kwong. Here's a side note here. If the IRS loses in the Ninth Circuit Court of Appeals, there is a possibility this case might go to the Supreme Court, and that's going to certainly add more time to this. So stay tuned, watch the news, see what happens, right? So there's a possibility if the IRS wins, then we're not going to get the refund. If the IRS loses, it might go to the Supreme Court. Now, it's most likely if Kwong loses, there might be a lot of amicus briefs there to back them up and possibly go to the Supreme Court. So we'll see. I have no idea what's going to happen. All right. Continuation on line 8 here. Calculation of penalties and interest. The instructions want the detail, right? Don't just plug in a number, show how you got there. And we copy this from the transcript. I put the transaction codes, penalty for late filing, failure to pay, interest charge, failure to pay, interest charge. You could also put in the specific code sections there if you want to. You can do that also. And here's the dollar amounts I copied from the transcript, and that's how we got the $1,047.77. Now, the other question here is, at what level should we do this for our clients? Are we going to do it for $1,000? Are we going to do it for $10,000? That's something you need to decide in your practice and when it's worth it and how much you're going to charge for this. Speaking of which, this is just my personal approach, is that I would charge whatever time it takes to file this claim for a refund. However, under Circular 230, you're allowed to charge a contingent fee. So what I would do is I'll figure out how many hours it's going to take. That's going to be a certain fixed fee to get this filed. But if you do get the refund, which may be years from now, I'll take 30% or 20%, whatever contingent you want to make. Circular 230 does allow for that because this is not a preparation of a tax return. It is a refund claim or an abatement request. If the client paid the interest and penalties, we're requesting a refund. If the balance is still outstanding, if it's unpaid, you're requesting an abatement. So take a look at your client's situation. We're either asking for a refund or we're asking for abatement. So take a look at that. Or maybe they owe a little bit, they still owe some money, so we're probably asking for a refund and an abatement. So take a look at the balances for your clients there. All right, the bottom of the form here is the signature. Your clients need to sign this, and you sign it in blue ink. They want a wet signature. We don't want to give the IRS any possibility of rejecting this. So don't, make sure the client sign it, date it, you sign it, you date it. It's paper filed with the IRS, mailed. Use blue ink. Use one of those gel pens, so at least it looks like it's signed for real. Here's the penalties and interest. Section 6651A1, failure to file penalties. 6651A2, failure to pay penalties. 6654 for individuals. 6655 for corporations. Estimated tax penalties. That's Form 2210 or Form 2220. 6651A3, failure to pay after notice of demand. 6601, underpayment interest. However, if the interest goes beyond July 10th of 2023, you'll need to recalculate the interest amount. So don't include the whole interest amount because that'll be too much. So calculate what the interest would be up to July 10th of 2023. 6601E 2 to 3, compound failure to pay penalty interest, and 6721 to 6723, information return penalties. Now, what penalties are not covered? Those are not tied to a time-sensitive act. Those are not automatically postponed or abated. 6662, accuracy-related penalty. 6663, fraud penalty assessed for conduct occurring outside the disaster window. There's questions about other penalties, such as the F-bar penalty, the Form 3420 penalty. How about those? Good question. Of course, they weren't addressed in Kwong specifically. A lot of tax professionals and commentators say, go for it. What's the worst thing that can happen? The IRS says no. So there are some other penalties out there. We're not sure if it's covered or not because it wasn't stated in Kwong. But, if you reason it was supposed to have been automatically postponed, even though Kwong didn't mention it, give it a shot. All right, here's something I wrote. Sample letter, email to blast to all your clients. I call this the malpractice protection letter. So here's the email you send your client. Dear client, due to recent federal claims court ruling, you may be entitled to a refund of tax penalties and interest paid between January 20th, 2020 and July 10th, 2023. However, to claim this possible refund, we need to review your IRS transcripts to confirm you paid these penalties and interest. We will need to file Form 843 with the IRS no later than July 10th, 2026. The U.S. government has filed an appeal, so that means we will not know if you're entitled to a refund until the case is settled, which may be many years. However, we need to file a protected claim for refund to protect your claim for this refund. Please contact our office as soon as possible if you or anyone you know may benefit from this. So send this out to help protect yourself. So let's go over some resources here that are really helpful. Aaron Collins, our taxpayer advocate, put out a 4-part series on this. Part 1, tens of millions of taxpayers may be eligible for significant tax refunds if they act by July 10th. Very good article. Highly recommend you read it. Highly recommend you share it to your client if they're skeptical of this. Part 2 is how to use IRS tax account transcripts to identify potential COVID-19 disaster relief refunds. So she gives an example. I copied the transcript she used in her example, how to get them, how to read them. Part 3 is protect your potential COVID-19 disaster relief refunds by filing a formal or protective claims for refund. So she goes into the Form 843. She has some really good tips there on how to do this. Very, very helpful. Part 4 is a bit controversial. Beyond penalties and interest, how Kwong may affect missed refunds. Now, this wasn't addressed in Kwong, but Aaron Collins thinks that if your client did not file a 2020 tax return and was due a refund, but we didn't file it because it was outside the statute of limitations, you might have a shot here. So highly recommend look at part 4. So she's not saying just penalties and interest. How about taxes too? So something to consider. Now our very own Angel Zen, CalCPA member, award-winning CPA, wrote a two-part articles on this. Part 1, what California CPAs need to know about the Kwong case. Very good article. And part 2, a practical Kwong workflow for California CPAs. Highly recommend you take a look at these 2 articles. It provides really good guidance. Here's a link to the actual Kwong case. It's 17 pages. Just to warn you, the facts are a bit convoluted, but it's a good read. Publication 556, Examination of Returns, Appeal Rights, and Claims for Refund. The Claims for Refund part starts on page 13. Highly recommend you read that. And Form 843, Claim for Refund and Request for Abatement. Read the instructions very carefully. And good luck with this, and see if you can help some clients get some refund claims. Well, thank you for your attention to this, and good luck, and have a great day.